I have it under credible authority that there are countries that are already acquiring several 100,000 Bitcoin, moderate size, say, Gulf countries. Like, you can say, well, that's ridiculous, but there is a reflexivity here, right? And if the U.S. wants to mitigate the risk of losing that sort of advantage or option, it has to go relatively soon to mitigate that. But it can't go too far too fast. I think that's the prudent risk, right? You wouldn't want to like YOLO into Bitcoin.
Hello and welcome to Season 3 of Public Key. We have new hosts, a new look, and new amazing guests to discuss crypto and blockchain, policy and financial crime, tech, and everything in between. I'm today's host, Eitan Danon, Content Marketing Manager at Chainalysis. Crypto has woven its way into the tapestry of geopolitical tensions, the evolving cyber landscape, and an array of policy questions. In this episode, I sit down with Matt Pines, Director for Security Advisory at SentinelOne, to talk China, Russia, and all things national security as we break down the crypto and cyber nexus to ongoing geopolitical tension. Our conversation covers the intersection of Bitcoin and AI, the strategic implications for U.S. China relations, and the evolving threat landscape, including cyber deterrence and private sector responsibilities. Matt provides his insights into crypto and national reserves, the role of stablecoins in strategic competition, and even discussions on UAPs and non-human intelligence. This episode is not short on plot twists, but before we jump into the episode, everyone is reading and hearing about the SWI network, and we just announced that Chainalysis is collaborating with the SWI Foundation to enhance on-chain compliance and security. In addition to our own data and intelligence, we will also be ingesting addresses to identify illicit activity by leveraging data available from the SWI Guardian program. From this point, our team at Chainalysis has the ability to begin monitoring on-chain activity, ensuring a higher level of compliance within the SWI ecosystem. To read the full details, head down to the link to the blog to our show notes. Now, on to our episode. Welcome to Public Key. My name is Eitan Danon. I study the intersection of digital assets and geopolitics. I'm here today with my guest, Matt Pines, who is the Director for Security Advisory at SentinelOne. Matt, welcome to the show.
Thanks for having me.
It's great to have you here. I was just saying, we chat often enough that we ought to record this and put it on the internet.
I know, right? Those PETA summits, unfortunately, have not been recorded for posterity, so we'll have to make do today.
Tell our listeners a little bit about your background. You have something of an eclectic background, including kind of how you got your start and how you got your feet wet in national security work, and then, journey to crypto, Bitcoin, etc.
Yes. So I was a physics nerd growing up. I went to a university to study physics. I was also interested in philosophy. So I did 2 majors there, decided against a PhD, went over to London, did a master's in philosophy and public policy, stalling essentially, came back to the States, got a fellowship at the National Science Foundation while I figured out what I was going to do with my life, and then had a chance run-in with a college buddy of mine who was working at a startup that was doing some interesting, essentially like war games or exercises for the government, and they had just won a contract that was putting on the first full-scale cyber sort of scenario for the government. So that was the National Love Exercise in 2012. So I sort of was like, this seems interesting. I was at the end of my fellowship. I'll get a security clearance. I'll be able to do some interesting work, get some rent paid. So that sort of got me into sort of government consulting. And I grew my career in that domain for about 10 plus years, where I supported kind of a range of projects for a number of different agencies. Kind of the through line was sort of assessments of sort of bad case scenarios, sort of exercises, as well as sort of more like analytic assessments of national preparedness. I also did a lot of like field experiments for emerging technology, sort of operational evaluations of the government and sort of technology requirements. And then I did a lot of stuff towards the end in sort of cybersecurity as CISA, the new agency was getting stood up, help think about like how big CISA should be, kind of their force structure, et cetera. So I did a range of policy, technology, kind of exercises. I survived a number of different government shutdowns over the years. And so the opportunity came 3.5 years ago to jump into the private sector, where I became Director of Intelligence at the Krebs Stamos Group, which was a sort of boutique consultancy created by Chris Krebs and Alex Stamos to try to deliver sort of traditional management consulting services, but that integrated geopolitical and cybersecurity risk advisory support. So I had been doing that until Krebs Stamos Group was acquired by a publicly traded cybersecurity company called SentinelOne, and we became Pinnacle One, the strategic advisory group. We're basically, doing the same sort of work. My role is basically the same, except now we're part of this much larger cybersecurity company with a lot of additional capabilities. And so we have been with SentinelOne for about a little over a year now. And then in parallel, I have had kind of this intellectual, increasingly professional interest in the intersection of Bitcoin and national security. So about 4 or 5 years ago, I wrote a first white paper for this then sort of very nascent think tank called the Bitcoin Policy Institute that looked at sort of the broad, more strategic level questions about Bitcoin and national security. And I've sort of leaned more and more into that as Bitcoin has become more of a salient policy topic and macro relevant asset class in the last few years. And obviously now is poised to be potentially even more significant depending on what the incoming Trump administration does. So I've been, deeply engaged in sort of policy research analysis at that fulcrum of these emerging monetary networks, Bitcoin in particular, dollar-based stablecoins, and sort of the overall macro and sort of strategic future for the United States in a much more competitive global environment, competing against China over sort of digital network dominance in the 21st century. And sort of that's a focus of mine as well. And I think this convergence of these rapidly changing technology paradigms, increasing geopolitical volatility and uncertainty is sort of a ripe field. So this is where the cyber, the crypto, the geopolitics, the macro, I try to pay attention to as much of that as possible. So.
Yeah, is that it? I mean, that's a lot to unpack, but
I mean, that's going to be enough to get us started,
yeah, I think there's a lot of meat on the bone there. You mentioned the incoming administration, which has nominated a focal point, or a czar, I've seen, for artificial intelligence and crypto. So that grouping together of crypto and AI has a lot of wonks and pundits speculating about the implications of emerging tech in general and crypto in particular. So for both on the market side and for policymakers, how do you look at that? How are you viewing that nomination and kind of the posturing, at least for the immediate?
Yeah, I think that was a fascinating signal. The fact that David Sachs was designated the AI and crypto czar indicates, at least at that sort of high level, a sense of how interconnected these two emerging technology fields are. Because if you just look at the industries, they're not directly connected. I think there is an interesting, emerging economic connection in the energy markets in particular. And there's more speculative sort of analysis about where, for example, if you do have, say, AI agents that are conducting economically meaningful tasks increasingly at a significant scale, but they can't get bank accounts, well, sort of, all they need is essentially a crypto, address to be able to conduct transactions, to be paid for services, to pay for them, compute, etc. So there's certain speculative, maybe not so speculative projection that links the two. But I think they indicate also kind of the geopolitical stakes that the incoming administration perceives are relevant on these two particular technology areas, right? That there's a sense that on AI in particular, right, that the U.S. needs to maintain its current dominance and increasingly kind of demarcate global environment, friends versus foes. And the White House...
The diffusion order recently, I mean, we're
exactly,
a day or two out from that, yeah.
That we'll see what the incoming administration does with that, but I think that's more of an embedded, almost sort of structural logic as the U.S. is trying to keep its existing advantages while mitigating the potential for Chinese sort of rapid catch-up. So that's interesting. I think on the AI and crypto side, the political layer, obviously it tells me the fact that that's not just those two conjoined, but also just how much political influence those two different industries have now is a shift, right? I think it was building for a while, but I think you're seeing a changing political economy inside DC, right? So you can say the Silicon Valley tech bros essentially have a lot more say, right? Whether it's from the Vivek and the Elons of the world to the Peter Thiels of the world, the Palmer Luckies of the world on the defense side. I think there was a building political economy shift, and now it's sort of manifested, right? And we'll see what that new coalition looks like in sort of Trump 2.0. To what extent is a sort of isolationism versus internationalism, America first versus kind of, okay, how do we actually dominate global markets? This will be an inherent tension, but I think it will be a very different ideological orientation than Trump 1.0. And the new factions at play in this power structure, now that they have power, right? It'll be interesting to see what do they prioritize? How does it intersect with the legacy national security apparatus's kind of policy priorities, say to contain China, hold the line of the G7 kind of NATO structure around the world? Open questions in my mind, but I think the aperture is quite wide and wider than it has been in a long time.
Well, on AI, a lot of attention is being paid to strategic competition between the great powers and the middle powers in recent years, focusing on the chip war, supply chains, and export controls around the semiconductor kind of question. You have done a lot of writing if we take a look specifically at the U.S. China relationship and that layer of competition, which I think frames a lot of analysis these days. How do you see crypto fitting into the Chinese tech stack and the digital Silk Road, especially given the evolving position in the People's Republic of China on permissionless crypto projects, kind of more of an emphasis on permissioned networks and blockchain? How do you kind of put the puzzle pieces together?
This is where a lot of different threads come together. But I think on the strategic level, right, it's first to step back and say, what is China trying to achieve, right? And I think Rush Doshi has written a good book. He was the China director for Biden administration. I think he laid out kind of
the long game for listeners who are not familiar.
Right. So it's China sets true grand strategic plans. And then that filters through into all these different policy domains where they want to, in a sense, block, build, and expand their influence and their power and their security across all these different domains: economic domains, cultural domains, monetary domains, space, underwater, etc. Right? So they have sort of an all the above approach to sort of reinforce their national security, to sort of grow their power in their regional sphere of influence, and then to project global influence, to become a peer competitor to the United States, to sort of stand on their own 2 feet against the U.S. kind of led international order, and to sort of be able to be a rule giver and not a rule taker in the global system. So that's kind of their overall long-term objective, right? And they're building up their sort of enduring sources of national power, technological, scientific strength, as well as their own national champions across these emerging fields of technology, to act as sort of the platform of how much they're going to project that strength in the next 5, 10, 20 plus years. And so they have adopted a strategy in these different domains to do that. In a particular domain of sort of what you might call information communications technologies, which are essentially the digital substrate upon which like all of our civilization now runs, right? So there's the hard structure of that, right? The fiber optic cables, right, the Huawei 5G, the ZTE surveillance systems, Hikvision. So they're deploying around the world and sort of offering essentially a techno-authoritarianism stack to willing subscribers around the world, in the global south in particular, across Eurasia and the Middle East, even in South America, where the deal is, you get essentially to upgrade your sort of digital economy infrastructure with Chinese kit. It comes with all these sort of inbuilt advantages for regime stability, political dissent suppression, as well as, these other modules, right? If you want to hook into the Chinese economy, you can get Alipay, you can get sort of WeChat, you can get these digital payment platforms along for the ride. And that sort of stitches together wide swaths of the globe into this kind of techno-authoritarianism platform stack that China is trying to
I think
export.
You've called it techno-authoritarianism as a service, right? Or something like that.
Sort of my little glib way of kind of talking about it. So they're and there's examples of this where you see this political and sort of technological dynamic play out right in the Horn of Africa, about 5 countries that are all sort of one-party regime states. They sent most of their kind of up-and-coming regime sort of party officials, like sons and daughters of the elite, to this sort of CCP training academy in Tanzania. It was the only CCP party school outside of China. They sort of get trained in sort of the Chinese political model of governance. And then all those, sort of cadres went back to their countries, and within about a year or two, they all signed up for Huawei cloud deals, essentially. And you can kind of see this political and technological kind of paradigm playing out. And so that's like now just the basic sort of infrastructure layer. Obviously, AI is a part of that now as well. On digital currencies, right, China has a strategy of trying to export their model of central bank digital currencies around the world. And they've been using something called mBridge, which was incubated at the Bank of International Settlements, has now kind of been spun off and is now kind of its own initiative after U.S. pressure came to bear on BIS, but it's effectively an operational kind of cross-bridge CBDC platform that is really meant to link kind of the central banks of Asia and the Middle East into a sort of a clearing and settlement system that's kind of like a hub and spoke between central banks and sort of the major banks in those countries, acts as like a bypass, failover network, alongside CIPS, which is the cross-border interbank payment system that China has been exporting as well, that has mostly grown in the Middle East and South Asia. And you can see these are like both traditional financial rails as well as new digital currency rails that are designed to create kind of alternative financial clearing and settlement systems for China, around Eurasia with its main trading partners. That acts as like a system bypass to act as like, redundancy in case they get de-swifted. So that in of itself acts as a bit of a deterrent against U.S. coercion, because now they have a credible alternative sort of failover network that they could use, or set of networks that they could use. And so the threat of us de-swifting them or swifting some Chinese banks it bites less. And then more in the medium to long term, it acts as a platform to sort of build and expand their influence. Right now, it could potentially take marginally more volume of those sorts of that sort of trading activity or trade finance activity that routes around traditional sort of institutions and infrastructure, right? Like the CHIPS clearing system in New York. And so this is all on the margin, like not like an overnight, like, okay, the dollar's dead or anything like that, but this is a process, because the dollar is both a unit of account, a medium of exchange, and a system, right? Is sort of a correspondent banking system. Sometimes people conflate de-dollarization as, the overall sort of percentage of global trade denominated in dollars versus thinking about the network topology of the global financial system. And I see very clearly the network topology of the global financial system is undergoing pretty radical change, right, on a time scale that's relevant for great power competition, even as the overall kind of percentage of, say, dollars being traded or being used to denominate global trade is only sort of marginally coming down, right? Not kind of like any sort of crisis. And so this is where kind of, yes, this sort of global network, digital network competition has like a core monetary element to it, because monetary networks are not just, figments of people's whatever they want to think about, what sort of symbol they have on their bank account, but like hard networks of power and infrastructure and institutional relationships, right? And China's building a different type of institutional structure for the global monetary system. The 80 years the U.S. kind of led this sort of organic development of correspondent banking networks around sort of trading centers in the world and sort of became offshore dollar centers. That has become a major platform for U.S. power projection, right? The extraterritorialization of our sanction regime only works because most of the world relies on these dollar clearing centers and offshore banks essentially to route their dollar payments for trade.
Right.
That has been a network effect that's been really useful to us. China is not trying to reproduce that whole sort of organic hierarchical banking system. They're trying to leap ahead using digital currency systems to create this sort of bilateral, almost peer-to-peer at the central bank, national bank level. So yeah, that's kind of China's role here. And so they have their digital currency, the digital yuan, kind of internationalize their RMB, which is probably going to run into some deep economic constraints about the nature of their closed economy and their surplus, their massive surpluses. It's hard to create an international unit of account when when you're running such massive surpluses. It's why the U.S. has this issue with, we are the dollar reserve currency, but we have to then generate these massive structural deficits in order to supply the dollars to the rest of the world. And of course, that has led to all these
friction,
all these issues now, right? So there's a lot of, again, to summarize, there's like both the traditional economic and monetary competition playing out, the sort of legacy imbalances in the global trading system that we'll see if the new administration wants to, do some shakeup there. And then there's just this technological competition for what is going to be the platform of the 21st century for digital commerce and trade. I think U.S. and China are taking very different approaches to that. China has like a top-down directed, very specific strategy. The U.S. has mostly kind of rested on its legacy laurels. And then there are these emerging kind of private sector, open source digital currency projects. You could say Bitcoin and dollar-based stablecoins are kind of the two most important ones. They're kind of emerging or more organically on the bottom up around the world. And it's kind of, this is the interesting dynamic playing out.
Absolutely. Well, a few weeks ago, we had on the pod Tom Keating, who is the head of the Center for Finance and Security at RUSI, and he spoke to us about the national security implications of, how countries store their national wealth, as well as settlement and clearing systems in the context of alternative payment systems, a lot of what you were just describing. You have written, I have a quote here, that the blade of sanctions might be growing dull, and that the world is, quote, rapidly vaccinating itself to the threat of U.S. sanctions via alternative national settlement systems that bypass U.S. clearing infrastructure. So with the prospect of a possible conflict in the Strait of Taiwan, how do you kind of view this conversation? And is it through CBDCs and that central bank linkage that you see power being and leverage being exercised, or are there other financial, digital and blockchain based, or other kind of mechanisms that you see playing out in that space?
Yeah, this is where I have to separate my analysis from, like, I'd say, non-conflict scenarios where we just sort of continue to compete for dominance and influence in these technologies. And China has something called the blockchain surveillance network. Again, more of a permissioned, state-sponsored consortium to kind of support blockchain innovation, blockchain projects. And that's, part of their overall, they want to make sure they've got irons in all the different fires. But their strategic initiatives are about creating their own, redundant and sovereign payments and clearing systems with as much of the world as possible that are alternatives to SWIFT, that sort of are there just in case, and then can become networks that they can sort of marginally try to reinforce over time to sort of take market share essentially away from the legacy system. Then there's the crisis scenarios where there is, no kidding, conflict in South China Sea or over Taiwan. We sort of start to climb this escalation ladder, and the financial domain, the financial component of that conflict is going to be extremely important. And there's been some war games to think through that as to see who has the upper hand in that, like who's got the glassiest jaw. And it's not clear to me that like there's an obvious answer to that question, right? It certainly will be very different than like the Russia example, right? I think people that are, if your first thing is, just to look to the Russia sanctions as like a template that will fail you. For one, it's just China is so much more integrated into the global trading system, and also such a massive source of dollars in the Eurodollar system, right? They have such massive surpluses of dollars that there's just such a massive interpenetration between the Chinese banking system and say the Japanese banking system, the South Korean banking system, as well as all this sort of dollar debt in Eurasia and Africa, that the idea that you're just going to like cut that off without creating essentially a complete global financial collapse is just not happening. So you would have to combine that with trillions and trillions of dollars of Fed liquidity, swap lines, et cetera. It would be a disaster of COVID times
several orders of magnitude.
Several orders of magnitude, right? So not something you just would want to walk into kind of blindly, right? And that's just on the financial dimension. There's all sorts of considerations on the cyber side, right? Which is obviously we've gotten disconcerting reports like every few months about another part of our critical infrastructure that Chinese cyber actors have compromised and probably still continue to compromise across our entire critical infrastructure, right? Including our financial system, right? But also, maybe even more importantly, our ports, our water, our energy, our dams, air traffic control, et cetera, have gotten access to, sensitive sort of Treasury Department networks as well, including CFIUS, our economic research. So we would have to be concerned that if we got into this escalation, in a crisis, that there could be actions the Chinese could take that could create very severe financial instability in the US or around the world. And there's kind of a mutually assured destruction in there, right? Because we're so interdependent, so intertwined. It's like this sort of sanctioning of Russian oil, but again, like 10 times the magnitude, right? At least oil is somewhat fungible. And even then, we didn't really sanction the oil early on, right? We only, I think, just last week have sanctioned the dark fleets and sanctioned the Ural crude. And you saw, Brent, I think, go up by like 6%. That's probably accounting for the fact that it won't be completely universally enforced.
I mean, if we look to the Cold War, you talked about MAD, mutually assured destruction. Ultimately, without a few speed bumps, cooler heads did prevail, but there were some close calls. Is there, it sounds like Matt Pine's prediction is that we may be in for it if there is a conflict in the South China Sea or some kind of flashpoint in the coming years. But the level of interconnectivity might cause people to think twice, or at least introduce different frameworks than they did ahead of or following the full-scale invasion of Ukraine. Is that?
Yeah, I mean, I think if I want to be more like take the example of the Russia invasion, right? So what happened in mid-February, that weekend, the G7 finance ministers got on the call. Secretary Yellen said, we're going to block all of Russia's reserves, by the next Monday. Japan signed on, I think, to that on Wednesday. And so it's like $300 and some billion of Russian central bank reserves were frozen. Then we said we're going to kick them out of SWIFT. But when we say they, we really just mean like some of their major banks, Gazprom. But we're going to create a helpful cheat sheet that we give to all the main sort of commodity traders and the major kind of global banks to see, well, this is actually how you still pay for your commodity trade with Russia without violating the sanctions on the major entities that we're listing. So we still want to get the natural resources that we need to lubricate the global economy out of this entity that we're sanctioning.
Without financing Putin's war machine.
It was a recognition of just how, like, you can sanction Libya, again, probably not going to have a strategic impact. You can sanction Iran, and was more significant. They're a major natural resource provider, but was sort of, the relative power was there, right, to have that and then mitigate the external effects. You even then still had, like, the Europeans try to basically create their own shortcut around it, right, Instex, and that was a major geopolitical issue, right? Russia took that up whole nother order of magnitude, and you saw there just how many countries, including friendly countries like India and others, were more than happy to essentially help the sanctioned entity sort of arbitrage, that regime, right? And still essentially earn, revenues, maybe not as much as they would otherwise have been able to accrue. So it was like adding friction to the subject of the sanctions. But I think what we saw in Russia is just the strategic impact has sort of diminished, right, at each scale of the entity you're trying to target. And so you would like naturally then, just without doing any further analysis, have to assume that like that ratio of like strategic impact would fall proportionally in China's case. And also the potential for blowback would be proportionally higher. It would be prudent for policymakers and strategic planners to consider conflict with China as a fundamentally different set of trade-offs when it comes to wielding the financial weapon, right? It's just not going to be, it's not giving us the same sort of advantage that we think it has in these previous cases.
Okay, well, given that, you mentioned the cyber attacks, and, we're on the heels of not only the Salt Typhoon attack in late December, large Chinese botnets have been disrupted in the United States. Last year, a ton of attention, I think rightly, is being paid to China. I think my question for you here is, what is misguided in that attention that is being paid to China? At Sentinel-1, you're advising multinationals on cybersecurity and geopolitics. What do you think people are missing or maybe misunderstanding about the cyber landscape, either as it pertains to the trade-based and finance-based angles or even more broadly?
I think one thing that has struck me over the past few years, obviously we pay a lot of attention to China. China as a threat actor. China's as a threat actor specifically for multinationals, critical infrastructure companies, critical technology companies, has been the increasing recognition that, one, the government's not really going to come and save you. That's a tough pill to swallow, and I think that needs to be factored into
If
some of
you are a
these.
company, you
If
mean.
you're a company, right, like, again, coming to save you, meaning like protect you from China, right? Like you had Colonial Pipeline, obviously there's certain capabilities and assets that can be surged in to help, reconstitute systems or get a private key from a ransomware crew, et cetera. So they're, saying the government is like completely out to lunch. It just means that the scale of the sectors that are being targeted, the amount of effort on the Chinese side dedicated to this as like a strategic priority is just vastly overmatching what the US government can feasibly offer to the private sector to protect. And so the onus is really on the private sector, right? This critical infrastructure owners and operators in particular to sort of take that responsibility. Right. And the issue is we live in a capitalist system where these risks are hard to price. And, the incentives aren't necessarily to internalize the costs to mitigate that risk, right? Obviously, the security leadership of these countries takes the threat seriously. But at the end of the day, if you have to prioritize spending $500,000, $1 million on, a certain project or threat hunting initiative or enhanced logging or re-architecting your network or ripping out some equipment, putting in some new equipment, these are expensive.
Right. There's a high opportunity cost for
And there might
some
be
of
other
those
things like
investments.
just, putting out MFA to the other half of the workforce that you haven't gotten it to, right? And so I think one of the lessons I've drawn is just, while at the same time that the threat is extremely large and the US government is kind of probably not going to be there to help you, these threat actors like China are not exactly like, again, like there's no one weird trick that's going to prevent China from getting into your stuff, right? But there's a lot of, I would say, low-hanging fruit, like almost basic security hygiene things that a lot of companies like still could do that would be high ROI to mitigate their overall cybersecurity risk, right? But also kind of make it just marginally harder for China to get into your networks, right? Just trying to add friction, right? And of course, obviously we have certain capabilities we offer, we sell as a service, and a lot of companies do as well. But I think I had to come to this realization after having a number of these different engagements, just how challenging it is. And this vague line of responsibility of like, at what point when a nation state is attacking, essentially penetrating a private sector network, does it become a national responsibility versus a private sector responsibility? When that company is, say, critical infrastructure, right? The government has an acute national security interest in ensuring China gets out, right? But that's sometimes a tricky line, and the government has limited resources. And so this is going to be an interesting policy question for the incoming administration. How do they balance offense versus defense, strategic resilience versus strategic deterrence? Because that's the whole thing, is you want to make your jaw not as glassy, and you want to make the adversary think that their jaw is glassy. And so that's a mix between making sure your defenses are built up and private sector networks are secured, while, credibly telling the other guy, like, our threshold for response for these activities is now going to be different, and we're going to change your strategic calculations. National Security Advisor Waltz has sort of described that as like a shift in sort of tone. We'll see how that translates, right? Cyber deterrence is a very tricky thing. It's not like traditional.
Right. You can't always measure that you deterred someone.
Yeah, and cyber is inherently ambiguous. Attribution is hard. Effects are nonlinear, and we don't have like good, well-defined strategic doctrine or strategic communication between the two powers on what our red lines are, no-go areas, our tit-for-tat thresholds, etc. And so that is a source of risk and uncertainty.
Well, we definitely see that playing out on chain a lot, I think, raising the cost for cyber criminals and other threat actors, whether it's in the ransomware space or, in mid-December, we released the preview of our stolen funds chapter to our crypto crime report for this year, and looking at some of the TTPs used by North Korean threat actors, and a lot of them are not always on chain, sometimes, leveraging IT workers and other vectors, sophisticated tradecraft to gain access. I think increasing literacy, and Chainalysis' motto goes, building trust in blockchains, but a big part of that trust involves literacy and education and capacity and awareness. So you mentioned the incoming administration. I want to pivot back to that. You have written an article on great power network competition and Bitcoin, as well as a memo you prepared for incoming Treasury Secretary Scott Bessent. And I recognize we have two Americans chatting here, so maybe we can also take a look at the global perspective, being that Chainalysis is a global company, and the markets for Bitcoin, for dollar-pegged stablecoins and other stablecoins, these are global markets, and the blockchain is universal in one way or another. So we're paying a lot of attention here, and certainly in the conversation, to digital assets and national security. What are some of the threats and opportunities you see in the context of great power competition associated with Bitcoin and stablecoins? The largest participants in the conversation being dollar-pegged stablecoins, but just kind of more broadly. You could take it US-wise, or I'm interested also kind of globally, how you view the landscape.
Yes, you need to start with some basic assumptions that you want to like ground your analysis, all very forward-looking, right? And I think what a lot of policymakers haven't yet done, although some have, is like updated to a view of the future where the scenario of digital assets, Bitcoin, stablecoins, other things, proliferating and expanding quite significantly is now a much higher probability than it was before. And so you now have to consider like all these other domains of, say, what's our influence in the Middle East vis-a-vis China? What's our geoeconomic leverage? What's our digital network power, right, in this China competition? How does that play out now in a world where, say, Bitcoin is 5 or 10 times the size, or stablecoins are 10 or 20 times the size? Those are now, not side niche questions. Those now have to be centered in your analysis, right? Because you're talking multi-trillion-dollar assets that, are global. So anyone can play in them, and everyone's going to try to use them to their own advantage, right? Both corporate advantage, individual advantage, as well as sovereign advantage, right? That's just, you have to, now these are variables you have to assess. And so, for example, I was in Abu Dhabi before Christmas at a Bitcoin conference hosted essentially jointly with the government of the Emirates. And there were delegations sent there from multiple GCC countries, right, with a very serious view to first order, understanding what the Trump administration's potential, digital asset Bitcoin policy was going to be, and had a decidedly different character to any other Bitcoin conference I'd been to, which are typically industry conferences. You got the influencers, you've got maybe some politicians that are trying to raise their profile, but this was almost like a summit, like a geopolitical summit, right? There were multiple delegations from multiple countries, all with a very serious question to bring back answers to their national leadership, right, to their kings, to their sheik, to the central bank head on this question of what is America going to do with Bitcoin. So that told me it's not hypothetical anymore, right? This is now explicitly playing out at the geopolitical level, right? And countries are still assessing for themselves how they're going to be positioned, and they're going to have their own internal political economy, right? Their own internal considerations, the resistances, etc. But I think we are firmly past the era where you could just sort of snidely dismiss Bitcoin is kind of this plaything of crypto bros. When you have people in control of countries and trillions of dollars of sovereign wealth, you might not like it, but it is what it is, right? And then if that's the world you're entering into, then the United States has a very clear choice. What does it do in order to ensure that it maintains its national security and its geopolitical advantage relative to its adversaries? This is an open game. People are going to have different strategies. How would we like to shape the overall external environment, the development and adoption of these networks and assets in a way that favors us versus our rivals, right? That's got to be the guiding question here, right? At least from me as an American who wants to ensure that America's interests are furthered, right? And along the way, right, I think also have a commitment to liberalism and human rights. And so I think these open systems are inherently better than the closed systems that our rivals are trying to impose, around the world. This is just better for human freedom, on net. But it's a competition, right? And so competition, you have to have a plan. And so Bitcoin and stablecoins, I think, are two of the key, most important aspects of this, right? And they have different flavors of implication for the U.S. And so that's where I kind of, I'll try to unpack that in those reports. In particular, the one I wrote for incoming Secretary Treasury Bessent was to try to help, from my perspective, situate Bitcoin in his larger geoeconomic strategy, right? So he's coming in, he has a certain view of a need for there to be a global economic reordering, that the global trade system is fundamentally unbalanced, that this is working against U.S. national security advantage, that there needs to be significant changes made. And so he has thought, and I'm sure a lot of other members of his team and other members of the administration are giving thought to traditional measures of economic statecraft, tariffs, sanctions even, export controls, changing of dollar policy, more technical tweaks around how, funding markets work and the treasury market, et cetera. So there's all traditional measures of economic and financial statecraft that they're looking to put into that toolkit. I wanted to make a case for thinking about Bitcoin as part of that toolkit. You're looking at the global financial, macro, geopolitical chessboard, and you want to re-engineer it in a way that favors America's interests. Just to my earlier point then, if Bitcoin is going to be a serious thing and it's going to be increasingly serious thing, if you ignore it, that's real strategic malpractice. It has to be a part of it. You have to think about how it can complement your existing strategies and tools and think about what adversaries could do in response, right? That's got to be prudent planning. And so Bitcoin, right, is both a neutral reserve asset that functions sort of like digital gold, right? Obviously speculative relative to, the proven asset of gold, but it's sort of on its way to sort of, increasingly take on larger shares of institutional, even sovereign portfolios in the next 5 or 10 years. So that's got to be factored in. The adoption of Bitcoin as a neutral reserve asset, complementary to gold, right? As sort of, taking up some part of that portfolio allocation. And then there's Bitcoin, the network, right? Which is this global, open, censorship-resistant sort of transaction system that doesn't go through any traditional intermediaries, right? And that rides on on-ramps and off-ramps in different jurisdictions, right? That are obviously from your perspective, the critical locus of this kind of illicit finance, sanctions evasion issue. Where those rails exist, who's controlling those rails? Is it essentially a CCP front or a Russian intelligence front rail or an American company that's maybe more regulated, that's more cooperative with you, that's dominating that on-ramp and off-ramp? Bitcoin is non non-state, is non-sovereign, is global. But its interface with the existing sovereign systems is definitely not, right? And so the construction of infrastructure to plug into the Bitcoin network is inherently a state competition, right? And a private sector competition as well, right?
And is that the national security implication then of creating a Bitcoin strategic reserve? At the Bitcoin Policy Institute, you're a national security fellow, and this kind of comes through in your writing, the stickiness of network power. Recently, we put out the introduction to our 2025 crypto crime report, and this is something that comes through in a lot of our research, that there is this broad diversification away from Bitcoin alone. We see that going in the direction of stablecoins and altcoins, and yet beyond certain crime types that remain kind of Bitcoin dominated, ransomware is one example, darknet marketplaces, we see that a lot. There is still this kind of strategic element that you describe. How do you see on the question of a strategic reserve in the US, which has been discussed, when you look at the pronouncements and statements of the Federal Reserve, I'm reminded of the scene from Team America where Hans Blix says, "We're going to write you a letter in which we tell you how angry we are with you, North Korea." Are we going to see more statements and letters and kind of studies that are rolled out slowly, kind of the considered and deeply conservative and well thought out kind of approach? Are we going to see kind of more traction on the stablecoin legislation front, do you think? How do you look at the idea of a strategic reserve, and how realistic do you think it is?
Yeah, so I think there's an increasing recognition about the political layer and the strategic, layer, right? The folks that are policy wonks and the folks that just are kind of like going with the vibe. Bitcoin and dollar-based stablecoins as kind of this emerging aspect of digital asset adoption are highly complementary to U.S. strategic interests. And so just on the stablecoin side, it's kind of pretty straightforward. The expansion of stablecoins do both support kind of the expansion of the dollar network on digital rails to parts of the world that don't have access to traditional dollar infrastructure. So parts of the world that China is also trying to like lure into their geoeconomic and digital sphere of influence, right? So this is a way of kind of pushing back and also expanding the dollar network, giving folks access to dollar, essentially IOUs on their phone to sort of dollarize the world. And if those are properly regulated, properly reserved stablecoin issuers, well, that increases sort of the structural demand for US debt to reserve those crypto eurodollars, essentially. And that's mostly on the front end, right? T-bills, et cetera. But if you had, say, whitelisted stablecoins from major banks, maybe you could create a portfolio of debt securities to back that would allow, more term funding for the government. Again, there's a lot of action on that in the Congress this year for stablecoin legislation to create just such a regulatory environment for that, to allow the U.S. to create a regulatory perimeter and to sort of then expand that out into the world, right? And to write the rules of the road for dollar stablecoins. Because a lot of countries are already moving ahead. Dollar-based stablecoins issued out of Dubai, out of Singapore, et cetera. So we need to play catch up there, and we'll see, how that gets, chopped up in the Senate and the House. But that's a clear national security priority, right? They recognize this is important and, has this sort of ancillary benefit for helping the U.S. government finance its increasingly large deficits, right? We now pay more on interest than we pay on defense. So kind of a problem. And that gets in the Bitcoin question of the strategic Bitcoin reserve. I would say structure the benefits in like three categories that would also, indicate different levels of policy responses. One is, okay, if you think Bitcoin is a good thing on net for human values and liberal values and also our power long term, then you want to send just a positive signal. You want more Bitcoin to come to the United States relative to Dubai, relative to Hong Kong. At SBR, that it's more of like a signal. It's like it's sending a clear kind of clarion call to the world that like America is going to be pro-Bitcoin. And we could just draw a box around the existing holdings and say the U.S. Marshal Services seized sort of crypto and commit not to sell it and just say, this is our SBR. That signaling function would be quite strong. And that could be done in executive order. You would then say you could add to it. That would be even a potentially stronger signal, but it would be limited to how much you could add to the SBR. This would be the U.S. government actually buying it. And that would require use of funds. And without congressional appropriation, there's limited funds that could be used. The Exchange Stabilization Fund that's available to the Treasury Department per the Gold Reserve Act has probably about $40 billion, like a net positive position, essentially just surplus couch cushion money, essentially. That could be used to fund some purchases of Bitcoin. But again, $40 billion would be decent, but it wouldn't be like a strategic game changer, right? But it would be, again, adding to this signal. Then there's this more significant bill that was introduced by Senator Lummis in the Senate called the Bitcoin Act, which would, in its latest incarnation, kind of commit the U.S. government to purchasing a total of 1 million Bitcoin over 5 years. And there you're really getting to the strategic level discussion of what is the long-term objectives for such an SBR. And there you're really pointing to a much more foundational analysis of the evolution of the global economic and monetary system, right, which right now relies on Treasury securities. And so the argument from my perspective is the Treasury market is going to be increasing source of strategic vulnerability as we have to essentially find more balance sheet to absorb ever increasing amounts of Treasury security issuance at the same time that our main adversary is aggressively, de-risking itself from that legacy monetary system and looking to alternatives. And so the Eurasian power bloc is, marginally shifting their reserve holdings into gold and away from treasury securities. And so we are having to sort of find other sources of demand for our debt, and increasingly cramming that into our friends and allies is already strained fiscal balance sheets. So we're heading into this point of both strategic competition, where this function of the treasury security as a global reserve asset is an increasing source of strategic vulnerability for us, right? It used to be a source of strategic strength in the petrodollar system, where we could basically help dollarize the world, recycle dollar surpluses mainly from the oil countries into our debt, into our asset markets, and this sort of flywheel worked. But it had this collateral consequence over many decades of essentially deindustrialization and atrophy of our defense industrial base. All those surpluses were instead redirected into financial markets. So you had rising inequality, sort of asset prices outstripping real economic growth, and our political system kind of then generated that instability, right? We can't have the system run. We can't be kind of the money laundering capital of the world for so long without creating political corruption and defense atrophy. So there's this recognition.
You also have a situation where the main customer for said oil, even if it's dollar denominated, has as one of its goals the revision of the entire system on which the dollar trade relies. So that's kind of an interesting cherry on top.
Yes, you need to hedge against both the risk of a strategic crisis in the treasury market and find ways of potentially, leveraging Bitcoin to, over the long term, reinforce trust, right, in the treasury market. Because right now, you have always this sort of lurking tail risk, right, that requires another several $trillion of QE from the Fed, right, whenever there's some air pocket in the repo market, or you get a COVID, or you get a Taiwan crisis, and that involves printing trillions of dollars. And you then have to usually force people into become buyers of your debt via financial repression, capital controls, et cetera. Those would be quite damaging to the world position of the U.S. and the economic order that we've constructed. So any sort of hedge you can sort of structurally embed on your balance sheet that's like relatively low cost now. Doesn't cost a whole lot, but is essentially has a inverse profile with respect to the risk you're running, right? So if you have to do this all of a sudden debt monetization event, well, guess what? Hard assets like Bitcoin and gold are going to run. And if you have those on your balance sheet, well, then those are essentially going to absorb that monetization. And people might even rationally look at that and go, oh, well, actually, that acts as kind of like a natural sort of counterbalance, right, to the debt monetization that could be coming. Right? It's always like an insurance payout, right? It's like a long-term option that most people don't need to think about, but the government needs to think about 5, 10, 20-year planning and strategic failure modes that they would rather not talk about because they can be self-fulfilling. But this is where I think Bitcoin, again, it's not like the one weird trick, but I think it's now reached a point where it shouldn't be sort of laughed off as a potential...
Perhaps not a panacea, but ignore it at your own peril.
Yeah, and meanwhile, I have it under credible authority that there are countries that are already acquiring several 100,000 Bitcoin, moderate size, say, Gulf countries. And so that is, okay, you can say, well, that's ridiculous, but there is a reflexivity here, right? And if the U.S., wants to mitigate the risk of losing that sort of advantage or option, it has to, go relatively soon to mitigate that. But it can't go too far too fast. I think that's the prudent risk, right? You wouldn't want to be YOLO into Bitcoin, right? We're just going to screw the treasury market. It's Bitcoin now, right? That would not be, I think, a prudent plan. I don't think that anyone is seriously considering that. But I think, if you have to do the scenario analysis 5, 10, 15 years down the line, and if you consider a scenario where Bitcoin is, say, some meaningful fraction of gold or even reaches parity with gold, well, just look at gold. Gold is a huge portion of sovereign reserve assets. And it's a geopolitical asset, right? It plays a very significant role in the structure of great power relations. Look at the history of the 20th century. A lot has been written about.
It stands to reason the same could be true and will be true for digital gold potentially.
Yes, and so it's okay, well, you have to then plan for a scenario where Bitcoin is reaching that level, and then it's clearly to your advantage to have relatively more of it than your rivals do. That's right. Not that complicated.
Well, you mentioned trends and looking forward to 2025. I have something of a mini lightning round for you. I have a few questions I've been meaning to ask you. What are you keeping your eye on in the cyber domain for the upcoming year? And what kind of nexus, if at all, are you tracking on the blockchain technology and cryptocurrency front?
I'm very interested to see what policy changes the administration unleashes on, say, offensive use of cyber, or even takes certain gloves off or winks and nods at private sector hack back. There's kind of been this somewhat tongue-in-cheek idea of cyber letters of marque, right? All sorts of ideas thrown around, right? But there's a recognition that the status quo in terms of the ransomware ecosystem and nation-state capabilities, as well as the rapid proliferation of AI, is going to continue to stress private sector defensive capabilities. And so I don't know what that tipping point is where the current way of doing things has to be radically shifted, but you could get to that point in 2025. All it takes is one or two really bad incidents, right? As we've seen where
to whet people's appetites.
Yeah, and so that is, I think, there's ideas floating around. I don't know what the incoming administration how they'll take action on that, but that's where I would focus, right? That sort of change of attitude and risk tolerance around offensive cyber, both on the official domain and in the private sector.
Two less crypto-centric topics, but I think, I mentioned your eclectic background, and I think our listeners would be interested. You are also a novelist. Can you tell our listeners a little bit about your first novel, Expectation Value?
Yeah, a long time ago, I thought, I have this thing, I need to write it down. And then it turned into this, 140,000 word sort of science.
Are you Satoshi?
I'm not Satoshi.
Okay, I had to ask.
I can state that for the record. If I was Satoshi, bro, I wouldn't be talking to you. I'd be on an island somewhere with armed helicopters flying around nonstop.
Yeah.
No, my novel I wrote it basically between 2015 and 2017, I think, roughly. And I sort of sat on it and I said, what the hell, I'll publish it. But it was basically about emergence of sort of runaway artificial intelligence, wove it into essentially a traditional espionage drama. So, but with private sector groups like mercenaries, as well as these cults out of San Francisco that I think have now become pretty apparent, right? The sort of effective altruist, we need to ensure that the future light cone of humanity is dominated by aligned superintelligence, as well as
like
more
sci-fi meets NVIDIA meets Jensen Huang meets John le Carre.
Exactly. Yep. So essentially you have spies, physicists, sort of sex cult, San Francisco AI, billionaires, all fighting for control of super AI. I think I wrote that before it became a thing. So
just reads like the business page today. For our listeners, you heard it here first, or if you knew about that book, you didn't, but check it out. I don't mean to blow up your spot, but I do think this is a nice way to end the conversation. I think this is way outside the scope of most of our listeners. You're one of the more knowledgeable voices out there on UAPs and UFOs. So for our unfamiliar listeners, can you please walk us through the issue, the good, the bad, and the ugly? You could give us a TLDR or a crash course. And where do you recommend people go for more information on this issue, which seems to be gaining more attention, not less?
Yeah, if you're talking about wildcards, this has got to be your biggest wildcard for 2025 here. And yeah, it's hard to give a TLDR other than to say that this subject is very real and is of acute and intense policymaker interest at the highest levels in the U.S. government and other governments around the world. UAPs, unidentified anomalous phenomenon, is sort of the watchword now replacing UFOs. But of course, a new term has entered the lexicon in the last year or two called non-human intelligence, which was introduced more formally by Senator Schumer and Senator Rounds and Gillibrand and Todd Young and Martin Heinrich in a bill that they introduced and passed in the Senate last year, or actually 2023 was the first version, the Unidentified Anomalous Phenomena Disclosure Act. So if you just want to kind of get your arms around like an official reference, I would encourage folks to just read the 64 pages of that bill text. Yeah. Read the definitions that they have for unidentified anomalous phenomenon, for technologies of unknown origin, for non-human intelligence, references to biological materials, and you'll see just how serious the Senate and those individuals are on the subject. And that bill was the result of multiple years of mostly behind the scenes investigations and conversations with witnesses and whistleblowers coming out of these, legacy program activities that the U.S. government has been engaged in for decades, and other folks maybe more ancillary to the U.S. government have been engaged in for many decades. And this will become more into the public discourse very soon. You're going to see more individuals with firsthand knowledge of these programs coming out, describing their experience. This will start to enter into the public domain. We'll see how the administration chooses to act on this as a policy lever, from the Secretary of State, Marco Rubio, the incoming CIA Director, Ratcliffe, the National Security Advisor, Waltz, knows a lot about this. You can even look at President Trump's statements on Joe Rogan, where he talked about and looked up the people coming from space. So yeah, this is going to be a very serious conversation. It has now become also a thing that the private sector is chasing. So this is a pretty radical change in the past year or so, is enough of this information has diffused out to enough sources of private capital and have given essentially the nod to go do things on their own as a way of supporting what the government is sort of postulating as this soft disclosure process.
I won't be so brazen as to ask you for the on-chain nexus to that, but it sounds like there's a there, and there's something that relates perhaps to some of what you discussed earlier relating to strategic elements, great power competition, or maybe, something beyond the nation state level. I don't know. I mean, I'm an outsider and clearly a noob.
Yeah, I mean, it's literally the biggest question you could pose here, right? And
worthy of analysis.
Its implications extend across every field that you could consider, right, of human civilization. So I won't pretend to articulate all of those. But the geopolitical competition is extremely relevant. China and Russia both have their own programs and are making, at least China has made significant advances in critical capabilities, and that's why the U.S. is changing its security posture and its sort of tone around the subject. They recognize that the approach that's been taken for the past 80 years is not sufficient to meet the pacing threat from China. And so they need to bring, and this was a quote from legislation, in order to mitigate the possibility of foreign technology surprise, the federal government must broaden awareness of historic exotic technology antecedents previously provided by the federal government for research and development purposes. Sounds like a mouthful. In order to mitigate the possibility of China getting the jump on us, the federal government must broaden awareness, meaning get more people aware, especially more like, say, advanced technology companies and the best and brightest, aware of these historic exotic technology antecedents that had been previously provided by the federal government to certain elements of our defense industrial base for R&D over many decades.
I'm picturing all the movies, but at least a Frontline special.
Yeah, and of course, this subject has been shrouded in taboo intentionally, right? It was a counterintelligence function to make popular culture sort of sneer and deride this as a source of taboo and push it off the mainstream discourse, and also importantly distract scientists from poking at certain areas that the government would rather not be pushed into the public domain. But that's changing. So you're seeing that official change happen on the margin. It's likely going to accelerate, and as a strategic source of disruption, it's quite significant. I don't have the answers to the timeline or all those implications, how much of this will be managed and controlled and how much will be unmanaged, uncontrolled. But folks that are not paying attention to this should probably start doing some research. Again, YouTube and Twitter is probably not the best source of veridical information on this subject. I would start with official government statements, and there's plenty. You can start with the history of the bills that have been passed in the National Defense Authorization Act for the past 4 years. Look at statements by senior political officials and
read the lines and read between them.
Yeah, and you might not have to even read between the lines very shortly.
Right. Great power competition and network power, offensive hacking, hackback, non-human intelligence, all on the agenda for 2025.
Should be a quiet year.
Should be a good year. Well, thank you for your time. It's great to have had you on the pod.
Yeah, thanks for having me.
Bringing us all back down to earth, we talked about global tensions between the U.S., China, and Russia and covered a lot of ground on national security, ransomware, and all sorts of illicit on-chain activity. If this interested you, check out the preview of the introduction to our 2025 Crypto Crime Report, which discusses the diversification and increasing professionalization of the on-chain illicit ecosystem. The preview touches on the emergence of large-scale on-chain services that provide infrastructure for illicit actors to help them launder their ill-gotten crypto. To check out all the latest charts and breakdowns, head to the link in the show notes. We dove deeply into interesting subjects on today's episode, and we would love to know what you think. Feel free to leave a review on your favorite podcast app or leave a comment in our LinkedIn post. Crypto is heading into uncharted waters in 2025, and we appreciate your continued support.